we are seeing another slow day in the TradFi markets, but that doesn't mean there isn't things to be paying attention to. We got more earnings reports out. We got the Fed Beige book out. We got people losing their jobs, unfortunately. There's a lot happening, not reflected in the markets today, but it will be in the coming weeks and months. As we get going into that, please hit the like button, subscribe to our channel. Nothing we say is financial advice. We are not financial advisors. We're a couple of guys who love following the markets, nerding out on this stuff. That's what we're going to do today. So please do your own research before making any buys or sells. Kevin, we have more data out from Netflix, Morgan Stanley. We got recaps on the state of the economy from the different Fed branches. We have layoffs happening. It's a pretty wild time. But that being said, as I mentioned before the show started, and as I predicted on Monday, there's no direct like inflation reports this week or like huge job reports. So we're not really seeing a lot of action in the markets. It has been legit just sideways all week. I mean, if we look between the SPY, the NASDAQ, and the Dow, all between down a quarter of a point to up 0.07%. So not a whole lot happening out there. That being said, there's still plenty to keep our eyes on that's going to lead us in the direction of where the markets will head looking forward.
Yeah, definitely. It's TradFi market's kind of boring. Again, it seems like even though we shouldn't be, we're still relying on CPI, inflation, PCE, all this data that, affects inflation, what the Fed might do for the next meeting in May. I don't necessarily think it's that great of a trading opportunity anymore as it used to be. Like, again, we were talking about how September of 2022 and inflation was at 9.1%. We saw that thing just like shoot, like green candles back and forth within minutes of each other, $1,000 swing in both directions. That's when it was fun to be in the markets. You know what I mean? I remember one day where it was just 1,000, there was 1,000 points in the red for the Dow or something like that. I'm like, this is fucking insane, but I love it. But this week, extremely boring. Again, I think that's also, we're getting so numb to the fact that the Fed's going to raise rates. Is that bad? Yeah, I think a little bit, because that might be a little bit of complacency, like you and I were talking about. Like, okay, yeah, they're going to raise rates, whatever. But again, these things add up over time. It has a huge impact in the markets and in the economy primarily, and we're starting to see it with some of these layoffs that have been happening recently. Like, we've definitely seen a lot more layoffs than we were seeing a few months ago when we were talking about, it's way too low. So yeah, maybe it's good to see. I mean, maybe it's a boring week, but again, that should be telling as to maybe what the psychology of the market is right now.
Yeah, absolutely. It's been, like I said, the complacency of, okay, not a whole lot's going on. 25 basis points in May is priced in right now. There's none of the inflation or unemployment readings coming out this week, so we just won't pay much attention to it. I think that's how a lot of people are handling it right now, but we're still getting more data out. So let's quickly go through Netflix and Morgan Stanley, because these are a couple interesting ones. More investment banking side of things with Morgan Stanley that I think long-term is setting up for, obvious opportunities for the stock to pull back, right? Like, things are so heavily weighted on interest rates right now. So for Morgan Stanley, we saw earnings per share $1.70 versus $1.63 expected. That's down from $2.02 last year. They've struggled due to higher interest rates impacting mergers and acquisitions, and that's going to continue to be the case. We're going to see that hold up for a while now. So that'll probably be adjusted in the expectations moving forward, but something like that, if we see pullback, could be a good buy opportunity as the market deteriorates in the coming months. They saw a 24% decrease in investment banking revenue, 14% decrease in equity trading, and 12% decrease in fixed income trading. So not a great time to be an investment bank, and it's reflected in the earnings. Netflix earnings per share, $2.88 versus $2.86 expected, down from $3.53 last year. The big piece that came out was that they've pushed their password sharing crackdown into Q2 of this year. Originally, it was supposed to be in Q1. They said about 43% of its global user base share accounts. So if they can go ahead and cut into that number, that's definitely going to help with earnings. So that's kind of being priced into their Q2 earnings. And we also saw that the RIP, the DVD business, the business that killed Blockbuster, has gone away. They're sunsetting that. And so end of an era over there at Netflix. But just another interesting data point. They're down about 3.5% today. 4% now. They're down 13.40 a share. So they had been on an absolute tear. The hope right now for them is that they're able to get, more original content out, continue to compete with Disney Plus, hoping that the password sharing crackdown allows them to do that. So that is the big bet on Netflix right now.
Yeah, definitely. And again, I think that once you do that password crackdown, people are still going to buy it. Consumers, there's a huge percentage of consumers that use that as their primary source of entertainment. Again, I don't think a lot of people have cable as many as they used to. It's just like internet services and then maybe a few streaming services. I think that's the way a lot of the younger generations are definitely moving towards. And people are still going to pay for it regardless. They're going to, maybe it's also complacency too, because again, price of Netflix, per user going up. I think it's like $16 a month now or something like that. I'm pretty sure that if we go into a recession of some sorts, maybe demand goes down, but pretty much I think that price is going to be increasing, especially if they keep producing more original content. So we'll see. Hopefully inflation brings price down in Netflix though. I have nothing else to add other than that.
And then real quick on the Fed Beige book. So this comes out 8 times a year. The 12 different districts each do kind of a recap on different areas of the economy. It's then compiled and they do kind of an overall economic activity recap. So a few things that stood out there: consumer spending continuing to be flat or slightly down. Manufacturing is, been pretty widely reported as flat or down, even though we've seen improvements in the supply chain. So we're getting decreasing demand. I mean, as people have less money to spend, that demand is going to come down. We're going to see it impacted if we are in that recession, like you think already. That's another point toward that. And then on the real estate side, residential real estate sales and new construction have slowed considerably. And what we've been discussing for a while now, commercial real estate sales and leasing activity were flat to down across the board. So once again, it is a rough time in real estate. Not a lot of people are looking to buy with these crazy high interest rates. Not a lot of people are looking to sell and having to acquire a new high interest rate if they have a lower one. So it's a weird time right now in the real estate markets. And there's a lot of these smaller banks are reporting, and they're the ones who have the most exposure to commercial real estate. So I have to wonder how that's going to impact them in the coming months. And I hear a lot of the pundits on CNBC or Bloomberg say that, like, oh, there was that fear in March of all the banks. These are great buys now. I would, before doing that, look at these balance sheets and see which of them has the most exposure to commercial real estate. And those would probably be the ones I wouldn't be buying right now.
Agreed. Yeah, it's it's pretty catastrophic, commercial real estate. How many offices are absolutely just vacant right now? Yeah, it's a little scary because again, that is also telling of the jobs, the labor market too. They're not gonna, if we see unemployment continue to rise, we're not gonna see that many people or companies needing some of this real estate, the commercial real estate. So it's gonna be, again, it's all like layered on top of each other, but it's not good for the banks, it's not good for the job market, and it's not good for commercial real estate. If any 3 of these things are just pulled, it's going to be pretty catastrophic. So definitely going to be something that we're going to see over the next few months that I think a lot of people are just kind of hoping doesn't become a bigger problem than it most likely will be.
Yeah, and then we also lastly have more layoffs. There is a thing right here. Yep, Netflix unlocked it. There you go. That's all you need right now, man. You don't
Definitely.
need, cutting back on those expenses definitely helps. So we also had a lot of layoffs to discuss. There was another round from over at Meta. I think about 4,000 or so. So that is a sizable amount. A lot of those on the dev side. They're tightening up there. This kind of goes into my thesis that we're going to see a hit on crypto continue. When I think of who is most likely to be buying crypto, it is not the people who are, working in banking. Like, it is people who are working in tech who understand this better. And when push comes to shove, if they got to pay their bills and if they're used to a certain standard of living, the first place they're probably going to pull money from is crypto. And I think that is the same thing for student loans. So there's a lot of reasons that I'm going to continue to say bearish on crypto in the short term, despite being very bullish on it long term. And I'm happy just to kind of wait it out, see what happens, sit on my cash position, and take opportunities to nibble here and there when the price goes down.
Yeah, definitely. It's kind of weird because you and I have been calling for higher unemployment for a long time. I mean, back to the old show, it was probably 4 or 5 months we've been saying, there's going to be tons of layoffs. There's no recession where you're not going to see, unemployment rise as inflation
You can't have
decreases.
a recession when unemployment is 3.5%.
I
It's
agree.
not a thing,
It's
and you
impossible.
can't bring inflation down with unemployment at 3.5% and with wages high. Like it's not realistic.
Nope, not at all. And again, I mean, 2008 was what, 15 years ago? It's not that long of a time, even though 15 years, I guess, sure is a long time. But point is, there's tons of. I mean, can we not forget how many people lost their jobs in that recession? And again, inflation wasn't as high as is now, or it was at the start of September of 2022. So it's really just baffling to see how many people are kind of like unfazed by the fact that all these people are going to be losing their jobs, or they think that their job is secure. I continue to believe that no market, no industry is safe right now. Uh, Again, maybe the health and like
Yeah.
medical,
I mean,
like that's
healthcare
always
is
going to be
always
there,
gonna, yeah,
pretty safe
100%.
industry. But financial, recruiting, even like small things from like retail to restaurants, food industry, I think everything from the top down has a really good chance of absolutely being impacted. And again, it's going to be most likely be young kids straight out of college get their first job. It's always the last ones to be hired, and it's the ones that are out of sight, out of mind. So if you're working from home, there's a good chance that it's just easier to cut ties with someone that you're not going to have to see in the office all the time. That's again, it could be even colder than that. They could just do what McDonald's did and send everyone home and just be like, "Oh, maybe you're gonna get laid off, maybe not. We'll figure it out later on." But yeah, it's definitely gonna get worse in my opinion. I don't see unemployment slowing down at any point. I think the Fed is finally getting to the point where these businesses and these industries are starting to break, and they have to release some of that pressure from these higher interest rates.
Yep, 100%, 100%. I think you could also add, tobacco and alcohol into your recession-proof industries as well. I
Yeah.
mean, maybe not the IRL like breweries and stuff, but anyone who's supplying booze, you're probably going to be okay when things get bad because people are going to need to keep their vices.
Yeah, they're gonna vape. Maybe it's a good time to go long on Juul.
It could be.
I'm joking,
Could be.
but
I remember
maybe it is.
when I remember vividly when the COVID shutdowns happened, like here in Colorado, the lines to get into liquor stores and dispensaries were just absolutely crazy. So maybe we do see that happen again.
Yeah. Yeah, cannabis too, 100% ace.
Yep, 100%. Let's look at a few charts here before we wrap it up for the day.
Yeah, absolutely. Let's pull up Bitcoin dominance because again, that's the number one chart. I think that's most important right now. Got some nice bags in the cannabis industry. Nice, definitely in it sector of the market that's really interesting to see. I don't know too
Yeah.
much about it, but I definitely know that it's profitable, and it will always be
Yep.
profitable as long as it's illegal or legal in the United States. So
It's really on, and we could even do a whole show about this because I'm invested in a few cannabis startups. But to me, in these areas like here in Colorado, owning a dispensary is a big challenge, obviously. But I think a lot of the stuff on the infrastructure side is where I would rather be positioned at this point.
for sure. Yeah, Bitcoin dominance. I just wanted to pull this up because again, we were seeing the massive pullback last week. This is the daily chart, and we saw that we got all the way up to here. This was the height 48.90. I actually think it was a lot higher. I think it hit 49.04. That was the actual height. I don't know why TradingView is giving us this number. I remember seeing it live when it happened and hit that height. But point is, it came down. We saw that it's negative price action, and this again ushered in tons of people on crypto Twitter thinking that we're going into an alt season, that we're going to start seeing the pump because Bitcoin pulled back. That's let's see how much of a percentage this is from that height. It pulled back 4%. Okay, Bitcoin dominance pulled back 4% from this height, but from where it currently was from the start of this move back in, let's say December, we are up about. We went up 23, almost 23.5%, and then we're currently right now up 20%. So 4% back. I'm not surprised by a little bit of a pullback. Again, look think macro, look out. Again, we talked about this consolidation patterns that we've seen along the way after a massive leg to the upside. We got massive leg here, consolidation right here after this, consolidation up right here after this. So I think what we're seeing was we were seeing some consolidation. I think that we do have one last leg up. And since I was tweeting about it and since we talked about it on the show on Monday, we've seen a bounce because it's pretty undervalued on the daily. I think that's, we're seeing this push up. And it's very similar to what we were talking about yesterday. We were talking about how Bitcoin can pull back, but alts can pull back even harder. And the dominance could just increase because the value of the market cap of Bitcoin is still larger than that relative to the other 125 cryptos that make up BTC dominance. So when we look at this, we see that it's pushed up while Bitcoin is pushed down. See, right now we just hit 47.7. We're still making moves to the upside. I think that whether Bitcoin pushes up here or it just decides to dump and the other ones start to follow with it, most likely we're going to see Bitcoin dominance push up a little bit further. Again, my sights are at least the height of this, so like 49%, but I would like to see 50%, maybe a little bit higher than that. That would just give me like 100%. I think that's also a great opportunity to say, okay, alts are done here. Bitcoin's going to dump most likely after we get to this height because we are seeing some negative, price action. We'll look into Bitcoin next. Maybe some of those higher, liquidation levels, if we're shorting the market on alts, might not get hit. I'm not saying that it's not a possibility they can, but there's a good chance that, that limited cap for how high these alts can move is pretty strong. Like most likely it's going to go down rather than up. And will there be reversals? 100%. There's also one thing I want to look at on Bitcoin. I'm not an Elliott wave theory specialist, but I do like to look at patterns. 5-way moves to the upside, 3-way moves to the downside. I am seeing one macro move to the downside, and maybe this is the move. We'll look into Bitcoin right now, but Bitcoin dominance. I still think that this is going up. I have not given up on it. But I think that there's still plenty of room to the upside for that one. But this is the one I want to take a look at.
On that point from yesterday, like it's playing out exactly like we discussed. I mean, we see Bitcoin down about 3.5% over the last 24 hours. Everything else, 5+% down. So that is playing out as we thought it would, and I think it's going to continue to head in that direction. I keep seeing people on Twitter like, oh yeah, this is just another opportunity to buy the dip. I'm like, too soon. It's like straight out Fast and Furious, like too soon.
The dip that keeps on dipping. That's all I see when I look at these charts. It's gonna, I don't know, man. I don't long into resistance, especially after it's been moving up for 4 months. I don't have that. I have balls of steel, but my balls aren't made out of copper, and I can't put up with the amount of stress that you'll see, going long at 31,000 to the dot on Binance. So, just what I'm thinking. Here's the main chart that I wanted to take a look at. This is obviously the macro outlook. Let's actually pull up this one because I got too much shit on this chart. This is what I was looking at. And Elliott wave theory is pretty much waves in which the market moves to the point where we start to see some market psychology and how traders start to react, and when institutional players come in and out of markets, and when retail starts to decide to DCA or enter or exit positions. Point is, we're looking at this, and this is the entire view of Bitcoin right now. I see that we hit obviously this impulsive here to here. I don't think this is natural in any way. There's probably a 3-wave correction in here. I actually do see the correction in here. It's 1, 2, 3 right there. So it goes down, bounces, goes down. That'd be a 3-wave correction. Then we got the 5 waves up. And again, this is just psychology. We get a wave that goes up, people don't buy in, goes down because they thought it was fake. But then the next wave that moves up is the real one. That's where a lot of institutional players are exiting the markets. And then as it comes down, that's when retail starts to ride this last wave up to the upside, and then you get the correction. So it's all about patterns to the upside and then patterns to the downside. And when I'm looking at this, I do think that there was a 5 wave here. If not, there's a different structure that's going up here. But when I look at this on the macro, I see something that could potentially be this. That's a little bit too deep. Something like that. That's very possible. And that's to the point where, it's a 3-wave structure. So we came all the way down. We got our major relief rally, which is the one that we're currently in right now, because it's the highest we've been since, the low of 15. And maybe this resistance level is where we're starting to turn back, and we're going to finish this last of this correction. And this is a macro, so obviously this plays out over time. This is what I'm seeing, and I think this is the move here. I honestly believe that the top might have been put in for this move to the upside. So where that B wave is in that supply zone right here, this resistance supply zone, I think that's where we are, and I think this is where we're going next. I think it's downside. I don't believe that we're going up. Again, we're overbought, despite what Jim Cramer says. I don't think that we're oversold. I think we're extremely overbought. And when I look at this and I see some of the rejection that we're seeing on Bitcoin in that area, I feel more confident that this is the move in the long term. So let me just pull up this chart now because this is the one that I like to show. And we could see some of this nasty rejection in here. Like obviously, we're also seeing some volatility. So we're seeing bearish engulfing candles. We're seeing bullish engulfing candles followed by bearish engulfing candles. Not necessarily something that you love to see, and especially when you see how low the volumes are comparative to how high they were when this moved to the upside. But then now the volumes dropped off significantly, and we're starting to see some resistance in this level. Now, is that to say that we can't test 32 again? Absolutely, we could totally test 32 again. However, I think that if we do push from 32 from where we are right now to 32 or so, I don't think most of the altcoins would be in that move. I think a lot of that would just be Bitcoin dominance taking over the entire market cap. That's just one thing I'm saying. If we also look at, this bearish engulfing candle we came down in, I think that if we close, let's see, the weekly chart. Yeah, if we close this weekly chart out of this range right here, so below 28,809, which isn't too far. It's $500 away. And right now we're down 1,076 USDT right now on the daily. There's a good chance that, we're starting to see that progression to the downside on the weekly. We're extremely overbought on the weekly. And I said, it only takes a few bad weeks for this 50 across this 200. It is extremely close. This is probably the closest it's been since, well, I don't even have data to go back that far on Binance because Binance is relatively new. So point is, that is not a good sign. I don't take this by any means as bullish. I'm actually looking at this as we're getting rejected in this area. Maybe we get a wick up here, but I don't think we're getting any candles closing above this level. I think that we're getting close to confirmation that, okay, we're now in a trend to the downside. Again, these were pretty weak. And if we get below even this 27,958, you got to fill that gap. And that gap is a pretty big green candle. So you'd either find support down here around 24,000 or you'd find support somewhere down here around 21,800, 22,000.
But Kevin, the Moon Boy said that 40K is a magnet. What are you talking about?
That's better be a strong fucking magnet because there ain't no way that's going up there right now. I'm serious. That's that shit is not going up there anytime soon unless you got magic like fairy dust or something. I don't know. I don't even know what I'm saying. This is absolutely insane to think that it's going to 40K. Like I don't see that in the charts. When I look at the weekly, this has to be filled if we get below this. And I'm looking for support. There's support here at 24,000, and there's also support here around 22,000, 21,800. So I'm just gonna highlight this for reference because I know that we're gonna come back to this in a few weeks, in a month or so. This is the range we're probably going to most likely come down to next. And could it go lower than that? Absolutely. If the bullshit and the toothpicks finally give in and the market goes down to where it belongs, yeah, good chance that we're going to see lower lows. I do believe that we are going to see lower lows for most assets in the crypto space, but this is 100%. I think this is the next move. Again, impulsive structures to the upside when we have very little support. We don't have much support around here either. Maybe we find a little bit of support right around this 26 level before we, make our next stop down here. But again, these are wicks. We'll just have to see how the weekly and everything progresses. But low volume and high volatility, not a good mix. Just like we look on the monthly, we see that, okay, we got a nasty wick up here. We got kind of rejected from it, and we're going to see how this monthly closes. But at the same time, the monthly actually progressed fairly fast. Again, we were oversold for a long time, and nothing was pulling this up from this stochastic RSI. So now that I see that we're getting rejected up here, this could go back to being oversold for a good amount of time too. I don't necessarily think that I don't want to say how long it was left in this bear market because, again, part of me is saying anything could happen. This is completely new territory for crypto. But at the same time, I'm also like, okay, 2008, May was the top of that move to the upside after Bear Stearns collapsed. June, July, pretty shitty months. August, pretty good month. And then September, October, November, December, January, that's when you finally bottomed. So it's really interesting to see how it's kind of lining up right now. Again, the May sell-off, that might actually be a thing, but we'll just keep an eye on it. Again, I'm open to the possibility of being wrong that this plays out longer or it can play out shorter. I really don't know. Something has to break. And when it does break, I think we will know when the bottom is. It'll just be absolute blood and fear, and no one will want to buy anything. But you'll see institutions absolutely picking up deals on a lot of these assets.
Souls will be crushed. That's
100%.
all. That's how we're going to leave it there. I think that is a good place to wrap it up for today. Another solid one. Appreciate the analysis as always, Kev. It's the wave theory stuff, that is you're too smart for me there.
It's over my head too. Smarter people than me that I'm just trying to learn from. But it's really interesting to see how market psychology works and like wave patterns and stuff like that.
Yep, absolutely. Okay, that's going to wrap it for today. Thank you, everybody, for watching. If you haven't already, hit that like button, subscribe to our channel, drop a comment, share us on social media, share us to your friends or coworkers, whoever. It is all greatly appreciated. We'll be back tomorrow, same time, same place. We got Tesla earnings here in 34 minutes. I'm sure that will be discussed. Looking forward to all of the latest that are happening in the market. So we will see everybody tomorrow. Have an awesome day.
Take care, everyone.